Welcome to the weekly chart review. It is October 15th, and what we're going to do first is go through Forex. Now, my voice is a little bit messed up. I've been battling a flu for the last few days, and it does not appear to be getting any better right now. But if you hear any hacking or whatnot in the middle of this video, don't pay it any attention. It's just the sickness trying to get out of my body. Anyways, let's dive in. So for AUD/CAD, what I've seen on the daily is it's been hitting strong points of support and resistance with these bands, with the Fibonacci channel. Once it got into the purple, it kind of hovered there for several months. And now what happened is it kind of broke through and went all the way down to the yellow. So I believe we're going to be seeing something between red and yellow for a little bit before it pulls back up. Now, I can't say for certain that it will start moving up, but we are, if we take a look at the weekly, right, we are getting close to Fibonacci retracement, almost to the 786 based from COVID lows. Right, where everything was locked down. So if we take a look, we're right in the golden zone right now, between 618 and 786. You know, I wouldn't be jumping into a trade anytime soon unless there's an EMA shift minimum on the 4-hour. Right now, it doesn't really look like it's slowing down at all, but it is due for a pullback. Right, so as you can see, even from here, we'll go from the previous high. It does a pretty deep retracement before going up. So if we take a fib and draw it all the way down, you can see that it rejected off the 886 before starting to drop over the past year. Okay, if we base that on what happened in the past, all right, we have gotten even lower before. So if we take a very long Fibonacci and go from this low to this high, and I'll drag it all the way across, okay, you can see that retracement was still in the golden zone and almost the same point what we're seeing right now. Okay, so if we go from this low to this high, right, almost the exact same situation where it was deeper in the 618 but not quite at the 786. So we might be seeing a pretty decent reversal from there. I'm not incredibly optimistic to gain more than about 400 pips because CAD is much stronger than AUD at this point in time. So we'll just have to see how that plays out. Okay, AUD/JPY, another one of interest. And I just believe that this is going to keep climbing, probably to this resistance level here on the aqua, on the fib channel. Okay, so if I switch that down to the 4-hour, I believe I set this one up earlier as well, just saying that would be a good time to jump in on a EMA shift. And what I see here, if entry was taken, it would have been somewhere around there. Now, if that was the case, this would already be at break even and the trade would be invalidated. All right, so there is going to be another opportunity to enter, and we'll see if it's going to be right here from where this formation happened. Now, we'll jump in on the 1-hour, and you don't really see much of anything except the fractal pattern, right? Similar to what we had here, but this is just a little bit larger. Okay, and by larger, I mean from the low to the high where it climbs about 160 pips. All right, so what I can see happening on the 4-hour is a potential entry at the 50% mark. Okay, almost exactly where I popped this guy. And the stop loss would have to be a little bit deeper, almost 100 pips. I'm not sure if I'm really liking that. The only way I would enter that one before an EMA shift would be if the candle closed and it just wicked into entry and closed either at the line or above it. But if it closes below that 50% on the 4-hour, I'm going to stay out. Okay, so that is the AUD/JPY trade idea. As far as CAD JPY is concerned, oh my goodness. As far as CAD JPY is concerned, I don't really see much potential right now for a decent entry. It's been very volatile over the last few days, right? Even if I go on the 4-hour, you can see, these are very big candles, very long wicks. It's not something that I would like to jump in on, but it seems that these wicks have been rejecting off of this Fibonacci channel line. Okay, they went as deep as 45 pips at one point, right? So that was the first one here. And then the final one would have been about 46 pips. So it looks like that's about a standard. I don't think that we're going to be heading back to those levels, only because we've kind of broken through that supply zone here. Okay, and now we're kind of testing it with the wicks going down. So I believe that this is going to still be climbing up. And as far as any retracement goes, so if I switch this back to the daily just to show, okay, we already hit the golden zone area here for continuation, right? So if we draw from that low to this high, you can see it just hit off the 618 many times, right? So that would have been 1, 2, 3, 4, almost 5 and 6, right? Those didn't quite come quite as deep, but I believe the train's already left the station, so this is going to be going higher. Any potential to jump in right now, we just have to have a very deep stop loss. So just be careful to see if there's going to be any volatility with the yen coming up this week. If not, then this is going to be a pretty stable move, similar to what we have going on here. Right? It's going to look something like that, but on the reversal. All right, so jumping in, Euro AUD. There was, I had a potential trade idea last week where it would have been an entry for a sell, but Euro just blew out of the water. Like it climbed a lot higher than I was expecting. So I scaled back a little bit and took a look on the daily to see if there was any points of interest. And I would say this daily candle pattern would be one of them. Decent point of entry, we're looking at a deep retracement followed by a fib channel line and the 50% on that candle. So everything kind of comes together around in this box here, and that would be the only potential trade I'd be looking for to take on a sell. And again, EMA shift on a 4-hour would be what I'm looking for. This one has been a very steady climb, and that would have been great to catch somewhere down here, but again, where it made the low, this dropped even lower, so it formed an institutional down there. Okay, if we jump on the 4-hour for now, it doesn't really show like anything except a fractal pattern. Same as here. So again, that's my target for it to climb. Let's jump on EuroCAD, and I'll switch this to the daily. So it kind of makes sense because Euro AUD and EuroCAD both have very similar charts, right? The Euro AUD is a little bit more embellished, and Euro's been climbing a lot stronger compared to AUD. So I mean, for it to hit the same point, I'm looking for it to hit the 618 on the fib here. However, the 50% looks like it'll be a very good potential contender because of this spot right here. There's a lot of supply in those areas. So very likely what could happen is if it'll wick and not cross this high right here, it's going to be a decent area for a sell entry. And again, this EMA candle will come into play similar to how it did there, I believe. Right? You can see where the bands were very tight together and they started coming closer. Finally spreading apart and had the shift going all the way down. So this looks very good for the long term, right? If we take a look at the 4-hour, you can see that the bands are still in sell, but we're slowly coming up on that 987 EMA line here. So again, two potential areas on the daily time frame. right? It would be that 50% based off of this supply zone or rejection off this EMA. And if it does go deeper, I believe it's going to be around here, which is 618 plus a fib channel line. GBP AUD, I believe it is in entry zone already. As you can see, the wick off of the 987 EMA line on the daily candle, and right there it rejected both 987 and the 610, right? So you can see right here it did not close above this twice. So very good potential for this to turn into a sell, especially because GBP, it was just temporary, the climb that it had. Even though interest rates have gone up, AUD is still more bullish overall, right? And if we take a look, it's kind of right in that sweet spot of fib channel plus 618 plus EMA lines, right? There's 3 indicators showing that it could have a rejection from that spot. And one of the reasons too, I believe it's going to be dropping is because, as you can see, I made a little note, 432 pip drop on the 5-minute. And I made this note a little while back, but I think it's going to come into play when it does, when it finally starts pulling back into that area. This is just a lot of imbalance left in this specific zone. So that's why I do believe we're going to be seeing it come back to that point eventually, at least to its 50%, right? So if I take the box, and I'll just draw it on the wick because that's where the majority of the imbalance is, right? The potential trade idea would be maybe going all the way down to there, followed by a move upwards, or again, if it would just close this off, it could go all the way down. So at least if this works out the way I'm thinking, it's a very, very strong trade idea if the EMA shifts on the 4-hour around that zone. A 23.7 to 1 ratio. It's pretty insane, right? And again, the stop loss could probably be tightened, and it all really just depends on which zone we're going to be crossing. So if there is a strong candle pattern for a sell, stop loss could be tightened a little bit, and this risk to reward could even be as high as 40 to 1. GBP JPY, very, very close. Now you can see the candles, I've been kind of waiting for this one to happen as well. Both candles almost wicked close to that entry, but they both rejected just shy of that 50%, right? And about 20 pips worth. So again, if it doesn't get up to that zone, EMA shift on an entry would be the best bet. All right. Okay. GBP USD. A lot of GBP pairs, right? As you can see, I'm very bearish on GBP overall. Like everything I've drawn up is for a sell. Right. GBP USD. Same idea here. There was a potential trade. When was the entry? On about beginning of last week, I want to say. Yeah, beginning of last week when maybe middle of last week where the EMA shifted around here, and I believe I mentioned that maybe on my video last weekend on the 8th. But anyway, this was drawn up to be a target all the way down to here. But what I've noticed is there was a very strong candle pattern. Like it looked pretty good going all the way down, and then the slow reversal, and finally an EMA shift. So best case scenario, this would have been almost a 6 to 1 trade, if not 5.77. Worst case scenario would have been a break even. Right, decent scenario would have been something about like a 3 to 1, because if the EMA shifted up here, that would have been a good sign of exit. So yeah, a bit of a bummer. It didn't work out the way I planned it. It didn't go all the way down. However, it also didn't pull back as high as I expected. Right, so you can see right here the same supply zone that was left. That's where it rejected from. Okay, and now it's going to be dropping once again. So one thing or another, it could jump in again on an EMA shift, or you can jump in at any point in time as long as you have a significant stop loss. because anytime I see these giant wicks and big candles, there's always a potential for something to happen on the opposite way. All right. So still a very good chance that this is going to drop. USD is going to be strong. I just think that if NASDAQ is any indication, it will be strong maybe within a few weeks. I have a strong feeling that there's going to be a bit of a rally on the US stock exchange, and it will start climbing. Maybe the US dollar will fall slightly before becoming much more bullish near the end of the year. So let's see what else I have highlighted. I didn't really go in the NZD pairs. Oil, we can jump in on oil for a second. So oil. So what we can see happening here, there was a pretty significant rally over the last week or so, right? Just this week it started to drop a little bit, but the last 3 weeks from the 28th of September, it climbed approximately 22%, and then it dropped down 11. So I mean, it lost half its steam, right? But if we do a fib retracement, right, from the low to the high, you can see right now we're almost at that 50, right? Kind of wicked off the tip of it right there, and sitting on that aqua Fibonacci channel line. Very good potential chance for it to keep climbing. Now that OPEC came out with its decisions, this is kind of going to be the result of it. I believe the OPEC happened last week. I think they came out with that decision on Thursday. So that's why the Friday candle, you can see how bullish that is, right? Like it went up $5 per barrel, and then it slowly started to drop off. Now, I believe it will continue climbing, right? Even on the daily, it had a rejection off that 610 Fibonacci line. And the last time we got there before it crossed over was way back in 2020. Okay, it came close a few times, but nothing to what we're seeing right now. So I believe that was the low, and what we're going to be seeing is a very steep climb, going probably either at or past this area, so around that 128 to 130 mark. USD CAD I use for my strategy, so not really doing the long-term trades with this one. However, as you can see, the bullish engulfing right here, that would have been a great time to jump in on a trade upwards with a stop loss of approximately the candle's length, right? So, I mean, yeah, having 122 pip stop loss is a little too much. But, yeah, it's been climbing pretty well. 9 bars, 7 bars, there we go. Within 9 trading days, it went up 275 pips. Right, it's been a very strong climb, even after this one right here. So if the EMA shifts on the daily like that, you know, sometimes it looks like a very good sign to jump in. So for example, here where it happened, it climbed 300 pips. Here where it happened, it just did a little bit of pullback, so that would have sucked. You know, EMA shift down, jumping in here. This is where you have to realize when it's consolidating, and it finally broke through. Okay. Let's see if I have anything on XTI here. It's more or less US oil, right? So as you can see, it hit off that 786 beautifully right there before it started going higher. And that's kind of where it's looking at. Don't really have any other information for long-term trades. I just want to remind everyone that this is the crappy trading season, so there's going to be a lot of volatility. Tight entries, if any. So if it makes you nervous to get in, and you're going to notice that you're going to have more losses at this time of year than you would around March or April or May, better just stay out for a few months. You know, take a break, enjoy the Christmas holidays. Don't mind the screaming baby. She just really needs to go to sleep. Yeah, it's wearing us down. All right, guys, so if there's anything you'd want me to jump in or discuss, please write it down in the comments, and I'll see you next week.